Welcome once again to Take 10. I'm Jennifer Madden, and joining us now with some great stock tips is Joe Meyer from Meyer & Associates in Florida. Thanks for joining us today on Take 10.
Thank you for having me.
So, Joe, now what's this I hear about the precious metal? To be investing in precious metals now because precious metals such as gold and silver could be in a bull market soon.
I have become very bullish on the precious metals because I believe we're in the very early stages of a pronounced bull market in those shares. As you know, equities had been in a bull market for the balance of the 80s right through the 90s, leading up to the top in equities of March of 2000. Precious metals have basically, during that same period of time, been in a bear market. So I think we are in a new phase in the precious metals. I think gold has a significant ways to move higher. It's currently $375 an ounce, and I believe gold could reach $425 an ounce by year end. Silver is currently selling for $5 an ounce, and I believe we could very well possibly see $7 an ounce silver as we get into the early part of 2004.
So what are some of the areas, you're talking about gold and silver, which stocks should we invest in?
The premier gold mining company is a company called Newmont Mining. We also have two other excellent companies that I'm following on a daily basis. They would be Gold Corp, which is a very fine company, which I believe has extremely good positioning for long-term valuation. The other gold mining share would be Glamis. This is another stock which I followed for a number of years, and I think at this point is very undervalued.
So why the all of a sudden turnaround? Is it just the natural course of things, you know, being in a bear market for a while and then coming into the bull market? Why all of a sudden the turnaround for the precious metals?
I believe the precious metals are giving us a very early indication that we will witness inflation as we move forward. And I think we've been in a low inflationary environment for a number of years. We've had historically low interest rates. We've now seen interest rates start to move back up significantly, and I think the move back up in interest rates is signaling without a doubt that we're going to see inflation as we move forward. In the silver area, I have three stocks that I like very much. My premier holding there would be Apex Silver. I also like Hecla Mining, and my third pick would be Pan American Silver. All three of them, I think, represent at these levels excellent value.
Now, really quick before we go to break, for someone who, say, is a retiree and has $100,000 in the bank, would it be a good idea for them to take out a portion of that money and put it in precious metals, and would it be a benefit to them to do it now?
I believe it would be an excellent idea for a retiree to put part of his savings in the precious metals. I would advise putting possibly no more than 5% of their liquid assets into the precious metals. I think it's certainly going to be a hedge against inflation. I certainly believe that they can see some very meaningful appreciation in the underlying shares.
Excellent. Joe, we're just going to take a quick commercial break. When we return, more great stock tips, so don't go away. Once again, welcome back to Take 10 with some stock tips from our money man, Joe Meyer from Meyer & Associates in Florida. Thanks for coming on again.
Thank you for having me back.
So the first half, we're talking a lot about the precious metal stocks, but with kids going back to school now, and you know, we're talking about, you know, precious metals being a great investment, but people are trying to plan also for their children's future, for college education.
Yes.
Big expense. I'm seeing someone in preschool. Who knows how much college tuition is going to cost when they, you know, 18 years from now. What do you suggest parents should be doing?
I think the simplest thing anyone can do is start your savings plan as early as you can and start putting money away on a regular basis and consistently adding to that over the years as the child would prepare to enter a university. The typical student loan debt today upon graduation of a four-year college graduate is about $16,000, which he will make interest payments on in the form of a student loan. And we're witnessing now over 810,000 students are paying an abnormally high rate of interest on their student loans. Back in 1998, the Department of Education came ahead and basically eliminated consolidation loans involving student loans And we've locked a lot of students in going back in those years to 7 and 8% interest payments. Currently, a student loan is less than 4%, the interest payable to the Department of Education. So the interest on a student loan is significant. The balance that is owed is large in a lot of instances. And quite frankly, I've never seen a worse job market for a recent college graduate than what we're currently experiencing.
So what should parents be investing in right now? Where should they be putting their children's money?
I think you have to look at long-term, high-quality investments. I don't think you take risk in the marketplace with monies that are going to be set aside to certainly finance someone's education. I think you look at blue-chip stocks in the equity markets. I think you look at AAA bonds, whether they would be corporate or tax-free bonds, and basically have a minimum of a 5 to 10-year horizon to let these investments actually work for the individual and appreciate and throw off good interest in the marketplace.
So when you're talking the blue chips, what are we talking here?
We're talking the highest quality companies in the S&P 500. They would be General Motors, they would be General Electric, they would be IBM, companies of this quality.
Now, is there the bonds that say people are buying bonds for your child or whatever? Are these going to be mature enough? And once they say like grandma gives a little Joey a bond,
right?
Are these going to mature enough so the fact is that they have some money for school in the future?
I think the key to moving ahead, if you're going to place money in bonds and primarily move into government bonds, is that you come in and you buy what we call TIPS, which are government securities. TIPS are basically Treasury inflation protected securities. And what they will do is be indexed to the inflation rate. And if we do start to see inflation be a problem, very similarly to what we saw in the 1980s, your interest payments will be adjusted accordingly to the inflation index. Therefore, you cannot lose any buying power by holding the bonds till maturity.
Wow, okay. So, of course, with school starting this month and everyone back to school, something for parents to think about. Even if you have a preschooler or a kindergartner, now is the time to start saving for a college education so your children don't have to be in debt later on. Joe Meyer from Meyer Associates, thanks for joining us once again.
Thank you for having me.
And of course, if they visit your website, they can get in contact with you that way for more great stock advice.
We have a toll-free number, 877-439-1575, and you can email me at meyerassoc.com, MEYERASSOC.com, and we will answer you as quickly as possible.
And of course, you talked about some of the stock tips and some of the how to get your kids on track for the future, but also you have other services as well for people investing in the stock market out there. Just name a couple of services so they know when they contact you that can help
we
them.
do portfolio analysis. We basically give investment advice and we charge hourly for that. As you know, I currently serve as an arbitrator mediator with both NASDAQ and the New York Stock Exchange, so we evaluate potential security law claims against broker-dealers and their registered agents.
Joe Meyer from Meyer Associates in Florida, thanks for joining us today on Take 10.
Thank you.
And thank you for joining us as well. Stay tuned for more Channel 10 News. More sports and weather are coming up next.